Thanks for this opportunity. I've been wondering why you invited me, because I'm not a banking expert, nor actually an economist. But when you spoke to me and said that maybe some of the alternative initiatives might be of interest, I have been very happy to join. So I'd like to speak on two things. One is some of the alternative financing and, in some sense, banking operations that communities have been undertaking in the last few decades, especially the last few years, and what that means in terms of in terms of at least some parts of the society, especially the most marginalized people in India, being able to access finances. And the second is to examine some of the ethics of banking, because I think it's very important that in India we start a national level debate on this. So regarding the first one, I'd like to give 3 or 4 quick examples of what either I've seen or read about on how people are managing finances. And this is especially with regard to communities or people within communities who don't have easy access to finances because they don't have the collaterals, or they can't, for social and other reasons, they can't even access banks, or for many other structural reasons that we know of in society. The first example is from Andhra Pradesh. This is an organization called Timbuktu Collective, which has been working with communities in the drylands, some of the poorest and small farmers in the drylands of Andhra Pradesh since the last about 25 to 30 years. One of their activities has been to help women to set up self-help groups or thrift societies. Now, this is a fairly common phenomenon across India. Of course, I'm sure everybody on this call is somewhat familiar with it. But what is different in the examples I'm giving is that these initiatives for setting up thrift societies, saving societies, etc., self-help groups, especially amongst women, have been done over a long process of the women empowering themselves and others helping to empower them to be able to manage and govern these institutions themselves. They are not institutions that are in some sense governed or controlled by the government or by NGOs and corporations. In the last 25 years or so, since the setting up of some of these local groups in each of the villages where Timbuktu Collective works, they then federated into something called Swashakti, which currently has about 22,000 or more members and a collective capital of about 25 crores. Now, this capital or these savings, etc., is used for loans that are reasonably low interest loans for women, especially to set up local small-scale productive enterprises, for personal emergencies, for social security, for life insurance or death relief funds, for children's education, etc. These are all things that that these families needed but did not have the finances to be able to do. And so what that has created actually is a very significant amount of empowerment amongst these 25,000 members to be able to run their families' finances and what they need. Out of this also has grown a number of cooperative societies, mutually aid cooperative societies. For instance, there's something called the Adi Shakti Women's Cooperative, which then began to actually work with farmers to see how they could shift from chemically intensive farming, which needed a lot of loans, because they had to buy the chemicals outside, buy the seeds outside, etc., to see how they could actually move towards more self-reliant organic agriculture, and from that actually form a producer cooperative, a farmers producer cooperative called Dharani, which right now has more than 2,000 farmers. And that has become a brand in itself and is able to sell its produce and then plow back the revenues into the cooperative society. Another interesting model they used for the initial investment in this cooperative, this producer company, was to take low interest loans from well-wishers. They raised, I think, many lakhs of rupees from doing that. And then eventually, because of the kind of model they have, they've been able to plow it back into their operations, repay all the loans, and now become self-reliant. The second example is the Mahalir Association for Literacy, Awareness and Rights, which Comrade Franco knows very well because he helped to initiate it, Malar in Tamil Nadu, where I think the early 90s, 1994 or so, starting with a few self-help groups, It has become a very large federation, possibly one of India's largest federations of SHGs. I think about 20,000 groups, 35 to 40,000 women involved, and something like 30 crores capital. Now, similar to the Timbuktu experience, here also the basic use of the monies that have been saved and the capital that's been generated is to, initially actually it was about paying off loans, especially to money lenders to whom people had to pay through their nose, but also then put it into small scale local enterprises, into pension schemes, into social security funds, creating their own health facilities and centers, creating their own people's stores. I think they're called Malar People Stores, producer companies, and a Malar Nidhi Limited for savings and credit, which I think is in the process of actually becoming a people governed bank, if I'm not mistaken. A third example is of Selco. Selco is a solar social enterprise which has focused a lot on creating energy security in the poorest families of southern India. So what they do is they work as a collateral with banks, persuade the local small banks in each of these villages to provide very low interest loans. And they provide the technology for creating the decentralized solar infrastructure for every family to be able to manage by itself, create the training possibilities so they can do their own repairs and so on. And through that, be able to be relatively energy self-sufficient. And again, it's another sort of a model of financing where social enterprise becomes an intermediary to help to do that, because on their own the farmers cannot access those loans. And the fourth and the last one, which actually we don't see so much in India right now, but we see it in many other countries, is what is called alternative currencies. And why this is important is because the domination of the centralized money system is so strong in our lives. Everything is controlled by it. We have no control over how much a rupee is worth in our lives. Today it's worth a particular product. Tomorrow I can only buy half of that product with the same amount of money. So alternative currencies is a very interesting phenomenon, especially in Europe and elsewhere, where people generate their own money for localized exchanges. You can't use it everywhere, of course, but for localized exchanges within, let's say, 5 neighboring communities or within a colony, sometimes even within the whole of Bristol, for instance, has the Bristol pound, where you can do that. What it does is it helps communities to be in control of the financial transactions, and it stimulates the local economy because you will buy local produce and you will also create social relationships in the process of this kind of financial transaction. Now, there are 3 or 4 common elements in these examples, and there are many more examples, of course, of this kind. One, very importantly, collective and democratic decision making with as little hierarchy as possible. Now, this is so very different from the kind of dominant financial and banking system that we know of. And to my mind, this kind of hierarchy of power, inequality of power, is also a fundamental part of the kind of problems that Professor Chandrasekharan and Paranjoy spoke about. The second is, and it's part of this, is empowerment of the most marginalized sections of the population. In the 2 cases I mentioned, for instance, especially women. In the Selco case, the poorest families, Dalits, etc. To be able to take control, to some extent at least, of their finances and their economy. Third is relatively low interest rates. This becomes obviously very important. Fourth, and this is where I'm going to get into the ethical part of it, in all of these examples, we also see that the responsibility goes beyond the members of the cooperatives and so on, to also thinking about things like ecology and environment. And as an environmentalist, this is of particular interest. So for instance, I gave the example both of, I think, Malar and in the case of Timbuktu, increasingly moving away from chemical and ecologically disastrous farming into organic and sustainable farming. In the case of Selco, away from fossil fuels into renewable and decentralized solar energy. In the case of Malar, if I'm not mistaken, they have also provided loans for things like community-led eco tourism or the management of waste. So you see an increasing orientation towards a responsibility to the earth also. And in the current COVID crisis and with climate and so on, this we know is so very important. So from that, I move into the second topic, which is the ethics of finance. Now, both Paranjoy and Professor Chandrasekharan have spoken already about the financial or the lack of financial ethics, the whole problems with speculation and so on. So I won't go there. That's not my area of expertise anyway. What I want to look at is the fact that when banks provide loans, and I'm talking about virtually all of the public and private sector banks, obviously they want to provide loans or they want to make investments in things that are going to be giving maximum returns. And that so happens to be, in many cases, things like the fossil fuel economy. Most of the banks in India, for instance, are still financing coal mining. They might also be moving into renewable energy, but they're still also financing dirty coal, which is causing enormous amounts of problems. Or, for instance, some of the biggest hydro projects in the northeast of India or in other parts of India, which are creating enormous amounts of displacement of people and ecological damage, are also funded, financed, invested in, or loaned by banks. A lot of other major infrastructure, such as superhighways and so on. Now, we don't have the time. This is not the occasion for us to get into fundamental issues of what is development and what is not development. But I think it's a simple phenomenon for us to be able to see what kind of impacts these projects are causing, which once the loan has been given or the investment has been made, banks kind of wash their hands off. They don't get into the fact that, okay, there's something that could be creating an enormous amount of injustice because 60,000 people are displaced by a large hydro project or by mining corporation. Forest is completely wiped out, wildlife is destroyed, etc. These are not the sorts of things. It's like I'm blind because I'm making my investment and I'm going to be blind to what the impacts of that investment are. The banks don't even necessarily follow whether laws in India are being implemented or being violated. So, for instance, the Environmental Protection Act or the Forest Rights Act or a lot of the land laws, which are routinely violated by the companies or the institutions to whom these loans and where investments are made by banks. That is something that doesn't seem to be part of the looking at the operations. The recent, what you, comrade, mentioned about the environmental impact assessment notification that this government has brought in, a totally farcical and disastrous kind of a notification, which basically is saying environment does not matter, people don't matter, what matters is profits above all. And we are, in some senses, the banking community is also complicit to it as long as it continues to finance these kinds of things. Center for Financial Accountability, of course, has produced quite a few reports of these kinds of investments. So I'm sure Joe and others can speak or give references to that. This is not to say that all investments are like this. There are also, of course, somewhat positive. For instance, some banks have gone into renewable energy. But even there, the issue is renewable energy of what kind? Is it renewable energy that's decentralized and managed by and governed by communities and ecologically sensitive? Or is it like these large solar projects and large wind projects which have their own negative impacts? I think all of this becomes very important also because when we talk about the fact that all the operations we do in the economy should have certain fundamental principles as underlying them, standards as underlying them. And when the government talks about self-reliance and justifies coal mining as self-reliance, and the banks go along with that, I think we are complicit in what is really, to my mind, and I'm not going to be polite about it, to actually criminal activities. This is criminally insane for us to be doing these kind of ecologically destructive, climate destructive, and people destructive activities. So I'm going to end by just talking about what I think needs to be done. Since, comrade, that's one of your and my focus areas. Also, we need to be looking at what's positive and what should happen. One, I think internationally, and even with as neoliberal and destructive institutions as the World Bank and the ADB, there's been increasing an attempt to, especially because of people's pressure, an attempt to actually create standards and principles which include environment, which include social equity, equality, and so on, in terms of loans and investments. And I think we need a national level discussion and debate and national level guidelines on that. I'm not aware if they're there. I don't think they are. If they are, somebody can please let me know. But if they are there, they're not being implemented. So we need really solid discussion on this, and making these sorts of standards and guidelines mandatory for all banking and financial institutions. Second, and this is important because what both my predecessor speakers have said about increasing privatization, things are just going to get worse because the private sector is even less accountable than the public sector on these sorts of issues. Second, significantly more support to the kind of decentralized, community-driven financing options, the examples of which I've given. We need policy support for that kind of thing, and we need civil society and other support also. And third, exploration into non-centralized monetary systems, which is not happening so far very much in India. But let's look at, for instance, alternative currencies, community currencies, and ways by which people can free themselves of the kind of shackles of the centralized monetary system that we have today. So these are three, and of course we can go into a lot of detail on each of these three sorts of suggestions that I have in the discussion or later. With that, thanks, and I'm sorry if I made any bloomers and blunders about banking, then that's because of my inexperience with the sector. Thank you.